Welcome to SB Talks. Today is Tuesday, February 11th, and I am joined, as ever, by our trusty Chief Investment Officer, Nick Ryder. Welcome, Nick.
Thank you, Vinny.
Now, today, Nick and I will be discussing tariffs, DeepSeek, US reporting season, and next week's RBA meeting. Welcome to all our listeners. Now, it might feel like we are in a bit of a Groundhog Day where it's Trump 2.0 over and over and over again, but since we last recorded, there's probably been quite a few developments we've seen on announcements across a variety of areas, but particularly tariffs. How are you seeing the new administration and some of their policies play out, and how does it give you pause for thought as an investor?
Yeah, I mean, I think we always knew Trump was going to introduce tariffs. I think he said famously, tariffs is my favorite word in the world. He sees it as I guess he sees it through a few different lenses, So for him, tariffs are great at getting, as a negotiating tool to get things like fentanyl or illegal immigrants. And we've seen that in the tariff announcements last week against Canada and Mexico, which were then subsequently put on hold for 30 days.
Bargaining chips.
So there's tariffs to achieve those aims. Then there's tariffs to sort of tackle what he sees as unfair trade practices. Obviously the US has a massive trade deficit with China, something he's been going on about for a long time. The previous trade war in 2017-18 was all about China. So I think there's that sort of whole broader thing about tariffs where he's trying to kind of, rectify these trade imbalances and bring jobs back to America.
So they've gone for a sort of a 10% across the board tariff there, not excluding some of their other areas which are more heavily tariffed.
Yeah, I think there's that. And then the third thing is tariffs as a source of raising revenue, and so I think he looks at tariffs in those sort of three lenses. And what we've seen initially was, the first ones last week were all about, achieving a particular outcome about border security, fentanyl, etc. And he got some concessions there. Now, all he's done is essentially put those tariffs, those 25% tariffs on Canada and Mexico, on hold for 30 days.
So he's got initial concessions, but we're going to be back to the table, we feel, in a week or two.
Yeah, and then the new ones announced over the weekend on steel and aluminium are probably more in that sort of second category, which is this sort of, bring jobs back to America. How can we compete against the cheap aluminium that Canada's able to produce using hydroelectricity? That's unfair. So
they've gone for a 25% across the board tariff on steel and aluminium.
And that's for all countries. So that affects Canada and Mexico in particular, but also South Korea,
potentially
China, obviously, Australia, Brazil. And that appears to be more, aimed at, bringing jobs back.
That's a more protectionist
approach. And then what we haven't seen is that 10% universal tariff on everything that he's threatened, which would probably be more in that, trying to raise revenue. So, I mean, that is still possible, but it looks like, he's going for that sort of short-term, using it as a negotiating tactic initially. So it remains to be seen how that will play out. It is interesting, though, that the markets actually have largely shrugged it off. We've seen this play out before. Trump comes in hard, tariff announcements, random announcements, and often uses those as a way to renegotiate deals or to get a better outcome.
It's really interesting, that one, because we talk regularly here about the lead into an election, and obviously we've got an Australian election coming up in the next few months, but markets generally don't like uncertainty, and we seem to be dealing with a significant degree of uncertainty there, where there seems to be a lot of policy announcements borderline on the fly, which should be the sort of thing that should really spook markets, but it's almost like they've become quite benign to it all. It's sort of like, well, let's actually wait and see how this plays out rather than react to the headline.
Yeah. I mean, certainly investors generally don't like uncertainty, and CEOs find it very difficult to make planning decisions and investment decisions in that environment. So it's not helpful in a sort of broader context, but for the time being, markets seem to be shrugging it off and ignoring it.
And they've been generally quite positive since the election, certainly, and even since the inauguration.
Yeah, I think that we have to wait. It's still very early days. I think we have to wait and see what's sort of finally kind of nailed down, and whether these things are just threats, whether they actually come into force, how long they last. There is a lot of... So obviously the US president has a lot of authority to impose tariffs, but a lot of them, there are rules around them. They can be litigated, taken to the World Trade Organization. So there's still a lot of uncertainty about whether the announcements actually find their way into the law or the rules.
Yeah, no, we very, very quickly saw federal cases pop up against some of the elements of the executive orders, and particularly around the revenue side. So we've talked on the podcast before the major challenges of US budget deficit. Trump and his heralded Department of Government Efficiency, DOGE, has now got to work. What can you tell us of early days there, but what positions have they starting to look at?
Well, I think they're going in and trying to get access to a lot of the data. So they've got access to treasury systems and things like that. And, Elon Musk sent in his sort of hit team, and there's a guy there who's got experience going into, say, Twitter when he took that over and really creating a lot of havoc, cancelling contracts,
switching off servers,
firing people, breaking leases. So he's the guy, that's sort of charged with a lot of this. So we're seeing a lot of that sort of play out, and a lot of it is being litigated as well. So, it remains to be seen what actual savings they achieve in the long term, noting that I think 80% of, the federal government US government spending is on programs like Medicare, Medicaid, Social Security, defence. There's very little that's actually discretionary. I think it's something like $1.5 billion out of 6 or something like that.
I think they've made some bold claims about the level of fraud they hope to identify and benefits. I guess that is to be seen whether they ever get that. But but I guess the objectives in terms of trying to bring their budget into some better form of balance is probably generally a much healthier thing in terms of their longer term economic position.
The big problem is it's the rising interest bill. When interest rates were zero, that was fine, but they've obviously gone up a lot, and every year Treasury bonds mature that have to be refinanced at the current higher rates, 4.5% for the 10-year. And so the projection in how much the US government will spend on just servicing these debt, that is the biggest growth driver of US government spending. It's not necessarily all these other programs.
The $1 trillion problem that they have now, getting that back in line. Since we last recorded, there's been a lot of attention around Chinese AI technology, DeepSeek. It certainly caused quite a few ruffles amongst some of the Mag 7, particularly NVIDIA, because of claims, which are, I guess, to be debated, around just the cost or otherwise low cost level in terms of producing their latest model, and I guess a threat to what might have been perceived to be a bit of an oligopoly amongst the major Mag 7 players and dominating the AI space.
Yeah, I mean, they've, very, very interesting firm. It was started by a hedge fund founder really as a sort of side project. He had a lot of sort of smart scientists, and he had a lot of older NVIDIA chips sitting around that he wasn't using to run his hedge fund. So basically created DeepSeek as a side project to look at developing LLMs, large language models, and was able to use a new technique to essentially build a cutting-edge model that rivals ChatGPT's best models, doing what's called, deep reasoning, test time compute. So there's more thought that goes into the actual response. It's rather than just kind of give a straightaway response on something that's been trained on, to actually think about the response longer. And it on the leaderboards is rates very highly, and reportedly was trained at a cost of equivalent cost of about $6 million versus 100 million for competitor models. The
early versions of OpenAI.
So what that's really shown is that a lot of these companies, the Magna 7 and OpenAI, don't necessarily have a moat around their products. If a Chinese rival can develop something just as good And I might add, they've made it what's called open source. That means it's free for anyone to
take,
modify, go and play with.
That's a very important point, because if companies have been spending, and a lot of the debate around this whole AI area has been huge spend going into it. Where's going to be the return on your investment? How do you monetize it? And if you have players out there, and we know that Meta already have done this, they made their models open source just to try and democratize the whole thing. Well, it makes it harder to theoretically monetize or get the value out of something, a commodity or not a commodity, having something that becomes commoditized. It's a real question mark over the return on the investments, and that will flow through into the reporting season we're seeing right now.
Yeah, absolutely. And it's something I wrote about in the 2025 investment outlook a couple of months ago, where I said, there is a risk of commoditization. There's a big question mark over where the returns, where the revenue is going to come from all this investment. So we've just had 6 of the 7 Mag 7 companies report over the last week or so, and the results were, I guess, broadly in line. There was a little bit of disappointment about some of the cloud source, the cloud revenues. But all the companies have announced massive increases in capital expenditure, data centers and things like that. So Microsoft, 80 billion, Amazon, 100 billion, Meta, 65 billion, Google, 75 billion. So it's 331 billion these companies are spending over next year on chips and data centers.
Well, they're clearly confident that they're going to be getting some return on investment on this money.
Clearly.
Yeah.
But I think there's still a big question mark about it, So, we looked at it, and, we did write about it in SB News. There's a thing called Jevons paradox, where as the price of something comes down to almost free, people use it more.
Yeah.
So there is an argument that, potentially giving away these models free actually does drive more use. And that will drive more computing. Obviously, need more computing resources.
So the use goes from sort of edge case use to becoming just mainstream part of everyday's life, which is, I suppose, what is the broader, longer-term case for AI.
Yeah,
that it's going to start to become embedded in everything, and then the demand for computing power to service that is potentially huge.
Absolutely. So I think that's kind of where the market's got to. There was that sort of knee-jerk reaction. We saw the Nvidia share price drop 17% in one day. Lost 600 billion of market value, the largest ever loss of value for a company in a single day. But it's to some extent recovered a little bit, and I think the market's kind of thinking, okay, well, maybe this actually does help Nvidia because people need more chips to run all these free models.
And then, look, I guess we had, if you look at the previous generation of the internet and Google's real dominant position in search, and their algorithm sort of kind of reached the point where no one else could quite get close to it in terms of its search power. It's probably a healthier thing that we potentially see competition breaking out on many fronts. Doesn't mean that someone doesn't go on to become a dominant player, but we're certainly seeing a competitive environment at this stage in the process.
Yeah, we don't know who the winners are. I mean, if you think back to .com, it was a lot of the internet service providers. AOL was a company that was worth a lot of money.
And telcos were very
highly. And telcos, MCI WorldCom and the router providers, and those companies actually weren't the winners from the internet age. It was Google didn't even really exist back then, and obviously Google's come to dominate, internet advertising. So we just don't know who the winner's going to be.
I guess watch this space with interest, just because the Mag 7 have become such a huge part of the broader global market, and therefore their valuations, we know, have been quite lofty. Anything else out of that reporting season, and start with the Mag 7 there, that sort of particularly, let's say, hit or miss on the reporting front?
I'd say the Mag 7, it was the first quarter where they really didn't kind of beat street expectations dramatically. I mean, Meta had a pretty good result. Theirs was good. But the rest of the companies, it was more ho-hum in terms of, they kind of met expectations. And then when they talked about some problems in their cloud computing business, or their guidance was lowered, the market didn't necessarily like that too much.
Because expectations are pretty lofty already.
Yeah, exactly. They were lofty expectations. But I would say broadly, it's been a pretty good reporting season. Earnings have grown 12% year on year. That's the fastest annual growth since early 2022, late 2021. So it's been a good quarter.
And how broad-based?
Yeah, so obviously the Mag 7 is still generating a lot of the growth, but there's been a bit of improvement in the 493 part of the S&P 500.
The rest.
The rest.
Well, I guess now you look at the US economy starting to benefit from a few rate cuts. You start to think that might start to be filtering through to the broader economy in certain spaces.
So US economic growth in the last year was 2.3% annualized, and then you've had 3% inflation. So revenue for the S&P 500 has grown 5%, which is pretty good.
Yeah.
And companies have actually improved their profit margins, and that's led to that 12% bottom line growth. So I think it's still a pretty good environment for equities. If we can continue to generate 12 low sort of double-digit earnings growth, then equities can kind of grow into the lofty multiples.
And assuming that the policy framework that which they all operate on remains somewhat business friendly, but that is the assumed path ahead. And then lastly, closer to home, we know we've got an election not a million miles away on our radar. A lot of attention on the RBA now as they come up to their next meeting. The most recent inflation data we've had is sort of increased slightly market expectation of a cut. Where do you sit on it?
Yeah, so market pricing now is 22 basis points out of 25
right,
price.
Okay.
So that's, 90% chance of a rate cut next Tuesday.
So the market is largely there on
all
a
the
rate
major
cut.
Banks are pretty much saying it's a cut. I think it's going to be, as I wrote recently, I think it's more kind of a 50-50. And from my perspective, you've obviously got a lot of uncertainty around trade. That's seen a lot of other central banks saying they're pausing their previous rate cuts. So, the ECB, etc., because, tariffs can potentially be inflationary. So, so there's that uncertainty. You've obviously got an election and federal budget coming up. There's some uncertainty around that. We've had the RBA previously go on record say they wanted to see more than just one good quarterly inflation print. So, the other data that we've seen, such as unemployment, has kind of moved in the other direction, saying the economy's still very strong.
Yep.
And the RBA has talked about demand being higher than supply. Excess demand is creating inflation. So that's the theme they've been running with, and there's no evidence to suggest that that's changed. So
you're making a lot of very logical arguments why there shouldn't be a move, yet the market's very excited about the thought of a move.
I think there will become a point where they could justify a move, and they probably have enough ammunition to justify one next week. But I think there's also benefit in waiting another 6 weeks.
And it's worth reiterating, our interest rates never got as high, so that's why we're later to the cutting party, and that also will reflect that even if we do start to see some move on rates, it's probably not going to be that far.
No. So the market has 82 basis points priced for the full year. Right. So that's 3 to 4 cuts, which that's
take us
probably
back to about 3.5.
That's kind of roughly neutral.
Yeah.
The RBA has said neutral rates around sort of that 3 to 3.5. So I guess that makes sense.
But as we sit at this stage now, sort of into the second month of the year, your outlook, markets still feeling pretty comfortable, confident?
Yeah, I think we haven't had a lot of data. We got the non-farm payrolls in the US last week, still showing a fairly healthy US economy. Unemployment rate actually dropped a little down to 4%. It was expected to be 4.1. So I think that the themes that I've written about, that the growth outlook is good. Inflation is coming down. I call it inverse Goldilocks.
Yep.
I think that's still intact.
Okay. Excellent. All right. An excellent summary as always, Nick. Good to have you back. Thank you. And thanks to all our listeners.
Thank you.